To sell contracts on Robinhood, you need to have an account with the platform and understand the basics of options trading. First, open the Robinhood app and navigate to the stock or asset you want to sell a contract for. Click on the Trade button and select the Options tab. Choose the type of option you want to sell, either a call or put option. A call option gives the buyer the right to buy the underlying asset at the strike price, while a put option gives the buyer the right to sell the underlying asset at the strike price. Select the expiration date and strike price for the contract. The strike price is the price at which the underlying asset can be bought or sold. The expiration date is the last day the contract can be exercised. Determine the number of contracts you want to sell. Keep in mind that each contract represents 100 shares of the underlying asset. Set the price at which you want to sell the contract. This is also known as the premium. The premium is the income you receive from selling the option. Review your order and confirm the details. Make sure you understand the terms of the contract and the potential risks involved. Once you have confirmed the details, submit your order. The contract will be listed on the market and can be bought by other traders. As the seller of the contract, you are obligated to fulfill the terms of the contract if it is exercised by the buyer. This means you will have to buy or sell the underlying asset at the strike price if the contract is exercised. It is essential to have a clear understanding of the risks involved in selling contracts and to use proper risk management techniques to minimize potential losses. Selling contracts can be a profitable strategy, but it requires careful planning and execution. By following these steps and understanding the key concepts, you can successfully sell contracts on Robinhood and potentially generate income from options trading.